All right, let's turn to the latest in the markets and the impact of the record U.S. government shutdown on Canada's markets and economy. We are joined by Theresa Shutt, Chief Investment Officer at Harbourfront Wealth Management. Theresa, thanks very much for joining us.
Thanks for having me. Good morning.
Are you surprised at the market's response right now today compared to what I think a lot of people might have been thinking might see it up a little bit, or did we already make those gains and this is just a bit of a clawback?
Yeah, I think, really historically, shutdowns like this, they don't impact equity markets as much. I mean, this was obviously a record shutdown, 43 days, breaking a record. And typically U.S. stocks aren't, phased by these. Over the period, actually, the S&P came to 4% and hit new records. So I think really the concern more is just about the kind of the cloud of uncertainty that's hanging over with respect to the data releases. Expect the data to trickle out next week, but there is some concern that maybe some of October's points, non-farm payrolls, CPI prints, may not only be delayed but not even released, and so that leaves the Fed obviously flying blind. And for Canada, we follow our lead pretty much by what happens in the U.S. markets. So this puts us in a bit more trickier situation, particularly when it comes to the labor market. I think that's a key one right now that's going to be focused. A lot of the private surveys have shown some softness in the job market, so we want to see if the data actually backs that up. And then, of course, what the Fed will do. So I think, even the Fed Reserve is a bit mixed on what the next approach is. The market is calling, I think, 70% for a cut. I think that's also likely, which, is obviously good news across the board.
And just going back to those numbers, is there enough confidence in the private numbers that companies can get by without seeing the federal ones?
I would say probably not. I mean, I think we really need to see prints from the Labor Bureau statistics, and I think hopefully we'll get that coming out soon. I think there's always anecdotal evidence. I mean, what we're seeing right now in the U.S. is I think what calling more of a K-shaped economy. You have certain sectors of the industry that are obviously doing very well, and others I think that are struggling. Obviously the tariffs have had some impact. Corporations have been absorbing costs, but we do expect that this will be passed on, and so I think going to see kind of this bifurcated economy, and so some weakness in some sectors, and other sectors will stronger. And I think, the wealth effect is showing itself. Obviously, everybody with a retirement fund has exposure to by sector. That's creating some, confidence, particularly among the upper middle class and the high net worth, and they're really supporting the U.S. economy right now. So I think it's a bit of a mixed story, and the data is really important to really assess whether we are looking towards kind of moderate growth, increased potential for recession. It's hard to tell. Again, that cloud of uncertainty.
And now, just taking that potential for a rate cut, you said 70%, moving that to Canada. Does that put pressure here? And then, of course, we're having the announcement on those infrastructure spending.
Yes.
The budget just came out. Where are we standing right now here in Canada?
Yeah, so I think for Canada, obviously the interest rate cuts for the Fed will lead to potential pressure, downward pressure on the U.S. dollar. That can help Canada somewhat. But I think, again, as you mentioned, eyes are very focused on the budget. It's expected to create somewhat of a boost on Canadian equity markets as well as the economy, with this focus on infrastructure spending, supporting sectors like industrials, energy, minerals or materials. The PM is in BC today. There to announce the next batch of major projects that will be fast-tracked. This is particularly important for mining and energy, in particular in Ontario. People are watching because of the fire. So I think there's some exciting developments. I think the budget did what it needed to do, which was to address Canada's fundamental problem, which is our declining productivity, and expanding the resources that we have access to really help diversify our trade partners, build that trade corridor, and get that that energy off the coast and across the world.
Okay, Theresa, thank you very much for joining us today. Theresa Shutt is Chief Investment Officer at Harbourfront Wealth Management.